In here, Sean?
An incredible country. I was at the infamous OPEC head of state meeting. I think it was, I'm going to say 1999, hosted by the man himself, Hugo Chavez, King
Oh,
Abdullah of
really?
Saudi. Everybody was there. Oil prices were $10 a barrel, and it was
Wow.
it was quite a drama. There was a knife's edge, and it was wonderful to be there. And
That's curious.
I like Lebanon itself, a beautiful country going through difficult times. It will find its way back, inshallah.
Eventually.
This morning, it is December the 13th. It is 10:30 UAE time, and Brent crude oil prices have found that downward draft again, that push under $73, and it's looking like the question at the beginning of the week was, would we see after 7 weeks of downward prices, would we go to an 8 week? It looks like that could be possible, with Brent trading below 73 this morning in Asia, and WTI well below 70 at 68.38. So certainly some momentum there. Let's kick off with all things COP, because of course, as the saying goes, it's squeaky bum time over at the Expo Center, 2 or 3 miles down the road. And the news coming out of there is that Saudi Arabia has signed off. Latest news breaking that Saudi Arabia has signaled it has accepted the draft text with fossil fuels included, and some sort of target date or some language towards phasing out, phasing down. We have to wait to see what the final text says, but Saudi is stepping back from the ultimate no, no, no. Let's go this morning and get some views from the region and see where we stand. Omar Al Abaidli, Director of Research, Bahrain Center for Strategic, International and Energy Studies. Get your thoughts on the news breaking out of COP that the OPEC army, OPEC Plus, were all lined up over the weekend firmly against anything like this. Now it's Wednesday, and it looks like there's a bit of crack there. Your thoughts on this decision?
Well, two immediate thoughts. The first is that the devil's in the detail, and it's these words, these equitable, fair, and so on and so forth words, which are supposed to be which intimate the idea that developing countries should be supported and should be allowed to use fossil fuels in a transitionary way, and that probably means that rich countries should bear the brunt of the price of phasing out fossil fuels. And then secondly, you have to remember that whatever anyone says, if you look at the Paris agreements, compliance rates are not particularly impressive, and one of the major reasons for that is that America and China, which are the two most pollutive or carbon-intensive economies in the world, the two are not particularly keen on spearheading this renewable energy revolution. So my guess is that after all the wrangling, fossil fuel producing countries are probably banking on the fact that the track record of compliance is not so good, and that there are significant conflicts of interest baked into the text. And as a consequence, what actually gets implemented could be quite far from what a superficial reading of the text implies.
Let's go to Australia, of course, also a very large hydrocarbon country. Clyde Russell, Asia Commodities and Energy columnist at Thomson Reuters. Your thoughts on this kind of deal? I mean, Omar does reference Paris 2015 as a sort of an idea that, the words are the words and then the implementation is something else. But what are the things we have seen, Clyde, since 2015 as a somewhat downward draft on investment in CapEx, the big oil majors putting a lot of money in the ground to build new capacity? That has clearly moved more and more into a crisis red flashing light space. And I think you could draw a line from the signals, the strong signals against further investment in CapEx, in hydrocarbons. Your thoughts on what this kind of deal could have on that space, and generally your reaction?
Well, I think what's becoming more clear is that the Western world is probably going to be much faster at the energy transition than the developing world is going to be, with the possible exception of China, because it's in China's interest to transition to renewables as fast as it possibly can, because it doesn't like being reliant on energy imports. But if you're actually generally looking at it, the Western world is the one where the money is. They're going to put the effort into it. I've always said that the best piece of advice ever given in the history of humanity is follow the money. And if you start to see increasingly, as we have been seeing, lots more money going into renewable energy and that sort of space, then I think the trend becomes quite clear. That said, whenever you have a meeting such as what we've had this week, it's always going to be a messy compromise at the end, because you're not going to get that number of countries with that many disparate positions to agree on anything other than the mildest sort of language that tries to please everybody and ends up pleasing nobody. So that's kind of where you go with these big international meetings. They're talk fests that accomplish very little, other than that they nudge things in a direction. And that direction, to me, seems to be quite clearly towards more renewables, less oil and gas.
Jose Shalhoub, LATAM consultant at Azure Global Consulting and Venergy Global. Are we following the money, to use Clyde's analogy, to Venezuela? The sanctions lifted or suspended since we last talked. What's the impact been there? Is Venezuela's oil production outlook for 2024 looking like it will be increasing?
Sure, thank you, Sean. Yeah, well, so far it has been positive. In some ways, gradually, we have been seeing numbers rising. For example, Chevron has been reporting a rise of its oil exports to the United States, and also according to the latest report by the Energy Information Administration of the United States, the U.S. has been, the imports from Venezuela has risen in the last week at around 20 or 30,000 barrels per day for the last week. So yes, it has been positive. Also, yesterday came out a report of an internal document from PDVSA that it is expected a rise of around 30% of incomes after the easing of sanctions by the U.S. But it also, but this also will much depend on the political dynamics next year and what will happen with the opposition candidate Maria Machado. What would Washington do if the government of Maduro does not lift the ban against this lady who's the most prominent candidate and who got the most votes after a primaries election by the opposition in the last weeks. So yes, but so far it has been positive. The 2024 looks slightly better for Venezuela, but it will much depend on the political dynamics for sure.
Omar, we obviously still are dissecting the tea leaves on the OPEC Plus decision recently to extend cuts further into 2024, roll over the existing ones and make even deeper cuts. And yet in the interim, the oil price is continuing to have a downward momentum. Your thoughts in the OPEC Plus decision and its difficult birth, and I'm wondering if you'd give us your analysis on why that was a difficult birth and what it might signal for the new year and the efficiency of this deal.
So first of all, I think that, again, it was the right decision. And from the perspective of OPEC Plus, they've had a pretty clear and straightforward goal for the past 5 years, which is maintaining oil price stability for the benefit of both consumers and producers of oil. And so when, the trajectory of oil starts, risking coming out from the band that they presume to be acceptable, they are signaling with a high degree of credibility that they're willing to take, painful corrective action to keep it within that band. And the reason why they have this goal is really for, maintaining investment, stability of investment, because as you know, the investment cycle for oil is so long that there needs to be a sense of certainty to the greatest extent possible about that future price. Now, why is it painful and difficult? Because, up until recently, most of the cuts were being voluntary cuts by Saudi Arabia, and Saudi Arabia is the one that's probably the most long-sighted. Now, others are being asked to, pony up. And so obviously that's going to create some consternation. They were previously just free-riding off of Saudi Arabia. And secondly, the world economy is not doing so well. So that creates domestic fiscal pressures for many of the oil producers, and therefore they're not happy about the idea of, cutting their revenues. But ultimately, I think Saudi Arabia and OPEC's leadership have done a good job of presenting a pretty compelling picture to the.
So you see no fracture. The fact that it was delayed a week, 2 weeks in the making, I think OPEC Plus emerges in full harmony.
You remember what happened in COVID, April 2020, when prices fell to $20, and then you had the negative prices on the WTI. I think that that's pretty. That memory is very clear to all the parties, and they really, much as they mumble and grumble, and these things take a little bit of time to negotiate, they know very clearly and from recent memory that the alternative to what OPEC Plus is doing is worse by a long way. If Saudi Arabia and Russia will loosen the spigots and go full blast, then the people who are going to be paying a bigger price than Saudi Arabia and Russia are the smaller oil producers who have an even greater reliance on these revenues. So I think that, the extra time it takes is more just because, we're pulling teeth, but these teeth are rotten and they need to be pulled.
Right. Whether there's an implant going in their place, we'll have to see. The situation as it looks really, Clyde, as so much of the OPEC journey has in the last 20 years and 10 years, dependent so heavily on where China goes, OPEC production goes in terms of certainly new production. Your thoughts we're waiting for the white smoke of China to put out their target growth figures for 24. General views is between 4 and 5%. Your thoughts on what that could look like, and is it important? And we saw a 5% GDP target announced for 2023. It didn't seem to light the fire under this economy. Your thoughts for the outlook going forward?
So I think that you're absolutely right.
No, I started putting that to Clyde. Sorry, I'll come back to you, Omar, on that.
I think it doesn't really make too much difference as far as commodity demand in China is concerned. I think it will still be fairly robust. What I actually see is, China's actually reached the point where it's now a very big, but almost a constant in demand for most commodities. So a 4 or 5% growth target, if that's achieved, and it could well be, I actually expect China to do a bit better next year than it did this year. I think what you will see is that their demand for commodities, oil, coal, copper, the whole range, remains fairly robust. What China is becoming is it's becoming more price sensitive. So it tends to buy and stockpile when it deems prices to be reasonable or have fallen enough, and it tends to pull back and trim when prices have risen too high, too fast. And we've seen that very much this year in oil. This is why the imports have fallen in the fourth quarter. That's basically at the time that they were buying those cargoes around July, August, they were too expensive, so they just trimmed it. Conversely, now that oil's back around $70, I expect that we'll see higher arrivals come February, March next year.
But nonetheless, the 5% target, if announced, would that be bullish or bearish from your perspective, or just sort of? I mean, 5% was relatively unimpressive this year, would appear on the macro level. I mean, oil commodities aside, is 5% now the new sort of neutral for China?
I think you've probably got that right. 5% is, all situation normal. It's not really, seeing a massive acceleration. It's not a deceleration. I mean, you still got to remember, 5% is a big number when you're talking the world's second largest economy. So, I think it's actually becoming, you've got to get a little more sophisticated with China now and sort of say, what is that 5%? What is the quality of that 5%? Where is it coming? And, I think that will help inform commodity analysis. So if that 5% is just straight infrastructure spending and a bit of stimulus here and some dodgy free money being tossed around the local government system, that's not good growth. But if it is actual manufacturing and things like that, then it's much higher quality, services, retail spending. So I think we've now got to actually really look at the quality of Chinese growth rather than just the headline number.
We've got to look under the bonnet, under the hood, so to speak, if one can indeed do so. Jose, one big number, speaking of fives, coming out of Latin America today, it has a zero attached to it. Argentina will devalue the peso by over 50%. I mean, my goodness, that is a big number headline to see a currency to be devalued by over 50% as part of emergency economic reforms. Your thoughts on the outlook for Argentina under its new president?
Yes, well, it was expected as after Javier Milei took, to assume power. I mean, and his position will, I mean, it will be, I mean, left to be seen if we will be seeing a rather different man after he got elected. After he faces the crude reality of the Argentinian economy, if he would move ahead and try to eliminate the central bank of Argentina, if he will dollarize the economy, after he, I mean, all of his promises in the campaign, I mean, after he was campaigning, but yes, it's, I mean, it's a crude reality he will be facing. I have some friends in Argentina that have told me that the reality in the country, it's tremendously difficult. But it's kind of the same playbook that, I mean, a man like Javier Milei or any other, ruler of the right will, I mean, will bring with himself and after more than a decade of government by the left, causing tremendous damage to the Argentinian economy.
Will the new administration in Buenos Aires unleash the opportunity of the shale that's been so long predicted in Argentina, shale oil?
Yes, absolutely. And well, it is expected that the most prominent field of Argentina, Vaca Muerta or Dead Cow, will definitely get some more boost from international investors, especially from the United States. It will be interesting to see how China, for example, after Javier Milei announced that he will not move ahead in joining the BRICS, for example, and after announcing that Argentina will join the OCDE, for example. So definitely, I think, and I see that the most prominent shale gas and shale oil projects in Argentina will get a further boost under Javier Milei rule.
Let's go to this survey question and get the view of the room and then post on social regarding the COP28 news. COP28 proposed deal references transition away from all fossil fuels. Could this cause oil producers to abandon supply cut deals and pump as much as possible now? In so many ways, you think we're always one day closer to that inevitable outcome. Everyone for themselves, pump what you can for as long as you can. The low-cost oil producer continues to subsidize the high-cost oil producer. Are we getting close to the day when that might be abandoned? Yes, no, maybe. I put the maybe in there just for fun because kind of it is a maybe. But the idea of what are the legacy tail hangovers of things like COP28 communiques, what mood do they set, what tones do they set, the tangible and the intangible. But does this, could this cause the abandonment of oil supply cut deals? Maybe not tomorrow, but maybe eventually. Omar, you wanted to jump in on that China point. I welcome your insights on that. And then I wanted to talk a little bit about Ukraine and other geopolitics. But on China?
So I do, first of all, I agree with your remark that, the OPEC follows China and it is very much the driver. I think one interesting point to note from the economics academic literature is there have been a lot more research recently exposing or casting significant question marks over data from China, the quality of economic data coming out of China, the reliability of that data. And obviously that includes, the figures that are included in plans and so on and so forth. So I think that while in a fundamental level, the relationship remains strong, tracking it in terms of media statements and plans set out by the Chinese government, that relationship is weakened because the trust in the figures is probably low and decreasing, and so it means that probably OPEC will react much more to spot changes in demand from the Chinese rather than what comes out in plans and so forth.
I wanted to get your views on Zelensky, the Ukrainian president, arrived in Washington yesterday. Last time he was there, I think he addressed both houses of Congress to endless standing ovations. On this occasion, he couldn't even get a meeting on the Republican side of the aisle. What does this tell you? What are its ramifications? We're now in the election cycle vortex.
I think that, unfortunately, this is independently of the election. The reality is that popular support for the war in Ukraine in the US has declined sharply. There was a perception early on, especially following the ability to repel the initial attempt at invading Kiev, that Ukraine could, punch Russia in the face and secure maybe a quick rout of the Russian army. What's become clear over the course of the summer offensive, counteroffensive, which has not delivered the desired results, is that the Russians are far more competent militaristically than Western countries gave them credit for. And as a consequence, this is a war of attrition that it's unlikely to be won by the Western countries back in Ukraine. And so now they're just looking to cut their losses. The amount of military hardware and human resources that the Russians can marshal for this conflict is just insurmountably large. And they also have demonstrated very clearly that this is do or die for them. So I think that this is the bitter taste of realpolitik descending upon Kiev. And what we're likely to see is at some point in the near future, a settlement, and it won't be a particularly favorable settlement for Ukraine, being forced upon Zelensky because he is incredibly reliant on Western support, whether it's in arms, in ammunition, financial aid, so on and so forth. It's a grim time for Ukraine.
It certainly is a grim time. The other outlook question that is coming up this week, Clyde, again, is the tightening cycle. The signals from the US economy. We had a pop up in core inflation yesterday, and it seems that oil prices, one of the multiple reasons why there's a downward draft this day's reason, according to your colleagues at Reuters at least, is that the indications that the tightening cycle may not be over. The oil markets don't like that. Your thoughts on where that goes and its impact?
Well, I think we're getting certainly closer to the end of a tightening cycle. It's hard to see inflation in the major Western economies, the US, Europe, accelerating again, especially if the oil price remains sort of below $80 a barrel. That in itself knocks quite a lot of inflation out, especially on a base effect as you go through the coming months. So I think it's perhaps the market did get a bit premature in thinking there'll be rate cuts soon. I think that's probably a little optimistic, but further hikes, that seems unlikely as well. I think, the base case is that we probably stay at current interest rate levels for some time. Whether that's a good or a bad thing for oil prices remains to be seen. For me, I think it's more, I'd be waiting to see actual recovery in demand. I want to actually see more oil being bought. And then I think prices might rise a bit rather than, trying to guess the Fed's next move.
As we go into, Clyde, into the sort of festive season, the holiday season, at least for much of the world, end of year and so forth, we're going to be suspending our podcast and restarting in the new year. Generally, a slowdown time in the markets. What will you be watching? What do you think could be the impact in a low volume, low traded market?
Well, I think you've got to always be wary, especially as you say, over the festive season. The market tends to be driven very much by news headlines. So you can get these weird things. You'll get something newsy happening, a breakthrough in Ukraine, something horrible happening with the war between Israel and Hamas, and it will happen, and it will come in Asian hours where the market's already thin liquidity, and then you'll see a massive spike or a massive fall depending on the nature of the news. I've always tried to say you've got to look through the sort of news-driven headlines. I know that's difficult in the coming weeks, but yeah, you've always got the risk of these little sharp spikes, sharp movements, but that won't reflect from the bigger picture, which is, OPEC Plus is calling it correctly in the sense that they're having to cut output because demand is nowhere near as strong as OPEC said it would be, or the IEA, or virtually everybody.
It sounds like probably, if it's not always the case, it's certainly this year, the season in which to close your book and not to be going on holidays or festive season with any exposure, because it does really look so unpredictable. Jose, I wanted to get your views. It's something we're a little bit ignorant on, and I wanted to get an update and an enlightenment on the situation between Venezuela and Guyana. Clearly this is deeply historical. Venezuela's claim to half of Guyana and inevitably a lot of the natural resources there. What's the current state of play? Where is it likely to go?
Yes, it is quite interesting, the situation. I mean, the government of Venezuela and also the government of Guyana have been playing their some sort of nationalistic playbook in both sides. Maduro tried to play the nationalistic and some sort of a chauvinistic playbook, seeing his popularity fall tremendously in the last years. And after the referendum held by the opposition, watching a tremendous turnout by voters, and after holding himself a referendum on consulting the people on the sovereignty of their over the Essequibo region, I mean, the turnout was tremendously low. The situation right now is, I mean, there is not the likelihood of a military intervention by the Venezuelan armed forces over the Essequibo, because the military calculus is not favorable to Venezuela right now. Yeah, even considering the superiority of Venezuelan armed forces in terms of numbers, but considering the support of that Washington, the UK, the CARICOM, which is the Caribbean Community of States, have given to Guyana, generally speaking, even considering that Russia or Iran, for example, might be supporting Maduro in this move, and considering that Maduro will be traveling to Russia the next week before the year's end, according to different reports. But and Maduro and the president of Guyana will be holding a meeting this week in St. Vincent and the Grenadines through the mediation of Cuba and the president of St. Vincent. So this is currently the state of play. There's not going to be any war for the time being. This is something that the government in Caracas will be playing out until at least the holding of presidential elections next year, and trying to kind of suppress other critical problems the country is facing right now.
Omar, last word to you. I wanted to get your insights on the recent visit last week of President Putin of Russia. So no abandonment of supply cut deals here. But what does that tell you about Putin's visit? Is it part of this OPEC Plus shoring up? Is it related to the regional conflict? What are your thoughts on why he came and what its impact was?
So I think it's a combination of things, because these overseas visits are so rare for Putin that it's probably a bunch of things. Among them, what you mentioned. So first of all, OPEC Plus for sure is on the agenda, as is also the war in Gaza. We've had the votes, had the UN Security Council, vetoed by the US, and Russia and China, especially Russia, are taking glee in being on the side of the entire world, and seeing the UK and the US isolated in supporting Israel. And we'll add to that also, Zelensky's visit to the US, or the negotiations regarding that visit at the time that Putin came. And this is his way of showing to the world and to the countries in the Arab world that Whereas, Western countries are a little bit vacillating when it comes to their support. Russia is unflinching. Whether that's, the reality is a separate issue, but the perception that he wants to convey is, just as in Syria, we stood by Syria, we're standing by you here on OPEC, on Gaza, on other important issues. Whereas Zelensky looks as though he's being hung out to dry by his Western backers. So it's very much messaging along those lines.
Well, we're going to have to leave it there with Brent crude oil still trading below $73 a barrel. We'll have to see where it moves through the rest of the day and get the news out of COP, and indeed will that in itself have any immediate ramifications for the markets. But until then, I'd like to thank Clyde Russell, Jose Shalhoub, and Omar El Abeidli, not only for joining us today, but for joining us right through the year. Really great to have your insights. And we couldn't have a more global podcast than today. We got Australia, we've got the Gulf, we've got Venezuela, and that's literally all around the world in 1.5 hours. So really appreciate that. I look forward to having you all join us at our Global Energy Outlook Forum, where we do that for over 12 hours on January 10th to get the crystal ball outlook for 2024 all in one day. Hopefully you guys will be there. Until then, have a great festive season, a great end of year with you and your families and all associated. Thank you so much. All the best.
Thank you.
Thank you.
Bye-bye.